Hello and welcome to Investing Confidential. Wow, so much out there since the last time I recorded a video. You got the housing market seems to be crashing. You got a government shutdown. You got inflation raging. Countries going on strike. Apple phones are a disaster. They're too hot to handle. That's another story I'm not going to go into. And the powers that be telling you everything's okay, that there's no recession ahead. I mean, this is laughable. Absolutely laughable. These people have no clue. It's happening. The numbers are not telling the real story. I told you the last two times the market has topped. It has topped. Finally, the realization is starting to come in here that we're in trouble economically. That the market is incredibly overvalued. Still, even with this market coming down, incredibly overvalued. Stocks like Apple are done. These guys have come out with two products already, both in the last 3 months. Both of them are a disaster. And Apple is, again, one of the seven stocks that held up the market. And when those go, they're gone. Amazon's gone. Okay, they're being sued into oblivion. They're not going out of business, but they're being sued into oblivion. Apple's a joke. I mean, they again, Tim Cook, good manager, but the guy's a disaster when it comes to innovation. And so, everything's coming home to roost. Okay. The US dollars had an effect on the market. It's been very high. It's artificial. I'll tell you what you should buy based on that in a little bit. But, this is what's happening. And so let's start right again. Let's start with housing and the economy, because they are linked right now, and they have always been linked. And the economy, as I told you, I've been telling you ad nauseum. Okay, it's been in a downturn for quite some time. I still say it's been in kind of a quasi-recession. At least most of the country's been in a quasi-recession. But the numbers hide the reality, and the numbers are a joke. Let's start with some numbers that are halfway decent. Okay, here's the University of Michigan. We talk about the consumer confidence. It's turning back down. You had a little bit of a pump. Now it's going to get worse. Okay, you see what's going on. Okay, all you have to do is go out and fill your car up every day. Okay, with the rising gasoline prices, and we spoke about that it was going to get worse, and it is. Okay, I mean, now I don't want to get political, but all of all this stealing and the thievery and Target closing. I mean, this is not. How could this be good for consumer confidence? How could anyone want to go to a store, and if you live in a big city, and get robbed or deal with the nonsense? And now there's not going to be any stores. And by the way, interesting enough, all these store closings in the big cities, okay, this is incredibly inflationary. When you think about it, it's inflationary because less stores, that means people that live in those areas have to go outside or buy from local business. Local businesses are going to charge a lot more than Target. It's inflationary for everybody. And the stores have to raise prices because they get ripped off and all these. I mean, this is a disaster, and the politicians don't give a crap. Okay, and then you've got another indicator of issues here. It's Chinese exports. Remember, Chinese exports, you can see here, I mean, they're declining rapidly. And what are Chinese exports? This is stuff that goes to Walmart, Target, all of these, the biggest, discount retailers that are out there, Amazon. And so if Chinese exports are plummeting, tell me, how could Walmart sales be? How could Target? How could Amazon? It confirmed that there's no demand. It's confirming this. Okay, and this is all going to be linked to the strike, the UAW strike. By the way, folks, I told you this. I'm going to tell you again, this strike is not going to end soon. And you know why? It comes down to the consumer. I don't know if you watched any commercials recently, but they can't sell cars. They're giving away massive incentives to get rid of cars. So Ford is loving this strike because they're sitting with inventory they can't sell. So they're not going to pay these people because they're on strike. That's fine. And they're selling cars slowly. So actually, Ford's going to benefit. Bottom line, they're going to have a good quarter because they're getting rid of cars slowly. with incentives. They're not paying anybody. There's no cost. So they're going to have an interesting manipulated quarter. But this is what's happening. And then they're going to settle. And then they're going to settle for 40, 50% increase. And it's not just the UAW. We've seen a bunch of unions. Okay, other unions are on strike. It's happening all over the country. You're just not hearing about it because they're smaller unions. You got this Hollywood strike, which is a joke. It's a sideshow. Okay, forget about Hollywood. Who cares? You know, it's an absolute joke, and they'll settle eventually because they're running out of money anyway. But the big problem is local municipalities all over the country. You got garbage piling up in different places. And they all want higher wages because the inflation is out of control. Okay, that's the bottom line. And here we look at part of this whole picture. We look at housing, housing affordability. As you can see here, it's the worst since 2007. Worse since 2007. And the talking heads are still telling you that housing is a great investment, that you should be buying a house. But these people are insane. Okay, and here's housing versus wage growth. Something's got to happen here, folks. Housing is out of control. There's going to be a mean reversion. Okay, and the mean reversion means housing prices are going to have to come in sharply. Okay, now look, wages are going up, that's for sure, but housing is out of control. It's going to have to come in. But and the wage portion, as I told you, it's inflationary. Again, going back to this whole idea of interest rates aren't coming down anytime soon, folks. Okay. Now, here is another chart about housing. You got long-term, existing home sales. Again, looking at a longer-term basis, what's happening today, it's showing housing has crashed. It's crashed. You won't hear that from anybody else, but this is the data. And what happens when housing comes down? You kill consumer confidence even more and the economy. Okay, and here's more data that goes against the narrative. Look at housing inventory. This is something that nobody's talking about. It's ripping higher, folks. Remember all the bulls, there's no inventory, that's why houses can't go down. Well, it's over now. It's artificial. It was artificial, and you're seeing inventory go, and inventory is going to get higher and higher. Okay. You look at mortgage rates over highest in decades. People can't afford a house. And now here's what's going to really move the needle here. And again, you're not seeing this anywhere else. Here we go. People here now want to relocate more than ever before, mostly out of the cities. But the problem is that a lot of these people that really want to relocate, they're stuck because they can't relocate without selling their homes. Now, in the past, okay, you sold your home, you relocated, bought another home. But now you're stuck with artificially low mortgage, and you're going to relocate to a place that maybe the house is lower, but the mortgage rates are higher, and you can't sell your existing house. This is going to put eventually, you're going to see more pressure on inventory. And this is what's happening today. A lot of homes going up for sale. Okay, they artificially, COVID again, caused major discrepancies. We're going to see everything mean revert back to what it was in 2019, including the stock market. I keep saying it. I'm going to be right eventually. Okay, the housing index is crashing. This is from the last video. Okay, you see it here. But Reuters, look at this. Reuters wants you to believe housing is strong. Now, this is literally fake news. Okay, this was planted by someone in the industry, some real estate broker or whatever. This is fake news. Okay, this is a joke. And what does this all mean? Inflation, folks, is not coming down anytime soon. It's sticky. This is why people are screaming at the Fed. They don't understand the Fed has better data than anybody else. Okay, they don't use it properly, but they do have good data, and they're worried. Wages, everything else going higher. And we spoke about this. Okay, and this we haven't even factored in the US dollar, which is going to begin a decline. It's been strong recently, but you're going to see, as I've been saying, okay, the US dollar is going into decline, and this is going to be very inflationary because it's going to put pressure on commodities. Those are inputs, okay? Inputs. And so here we see the 10-year bond ripping higher. This tells a tale. There's no rate cuts coming. The bonds are going higher. Rates are going higher. Okay, crude oil, by the way, folks, is going to 100. And I heard morons today tell, oh, it's going to go 100, then there's more supply coming in. No. Sorry. No more supply. Where's supply coming from? U.S.? No, not with this government. And then look at this. This is even more of a joke. You should be angry, folks. You should be angry when you see this chart about the strategic oil reserve. Okay, this is something that protects us against, maniacs. And now the Biden administration, again, not to be political, but this is a fact. They sold it down the river. They artificially tried to get inflation down by selling down the SPR. And guess what? It didn't work. And now we have no strategic oil reserve because the prices are ripped higher. What is the government going to do? This is a disgrace. Absolute disgrace. We're in big trouble here. Okay, big trouble here. And then you have US GDP came in today at 2.1, decelerating from a upward revision of first quarter. I'm not going to get into this. This is a joke. These revisions, by the way, folks, out of control. Completely out of control. It just tells you that the US government, the information that we get from the Bureau of Labor Statistics, all these organizations, this is not reliable. I mean, it's archaic the way this information is gathered. I spoke about this. I did videos about this. I'm not going to get into it. Go back to my other videos, but no one wants to do anything about it. It's a disgrace. We do not have reliable data. Okay, and you want us to trade, as an investor, I would be pissed off. Okay, and then we have the big thing coming up in a couple of days is government shutdown. Look, again, not to be political, but the bottom line is all you need to look is the spending. Okay, this is not about, this is all about spending. Okay, it's not about, by the way, our tax situation is getting worse. Okay, the tax revenue coming in is going to be a disaster this year. It already is bad. It's going to get worse. Okay, and we've printed trillions of dollars. They've debased the currency. We're not seeing it yet. We're going to see it very, very soon. And then here you have Moody's coming out and saying what they're saying. And I tell you about this. We had the downgrade, which I predicted. We're going to have another one with this government shutdown. Okay. And this goes back to what I talked about in the beginning, which is the US dollar reversal. Folks, this is an opportunity right now with the US dollar artificially high to get involved with gold or crypto or emerging market stocks, commodity funds, because there are plenty of commodity funds out there. Don't wait for the reversal. Get involved now. I would buy before this government shutdown because the US dollar is going to reverse and it's going to create a lot of opportunity. The stock market right now is reacting correctly. It's going lower. And rates, because rates are not coming down anytime soon, and there's no rate cut. So all these people that were buying, the market based on rate cuts and all this, they're reversing. Okay, here you have how weak the market is. This is S&P members trading above the 50-day moving average. It's plummeting. Everything's below the 50-day moving average. It's very bad in the short term. And here you have something we've talked about before. This goes risk premium. Okay, and what it tells you is that based on historical patterns, this market is very vulnerable. You don't want to have the market down here. Okay, this is telling you that there's no risk. And we know there's massive risk. So the market is mispriced. Okay. And then I just want to mention finally here on you could see the activity in short-term options. These are day options, weekly options. I tell you folks, don't trade these things. You're losing and you're gonna keep losing if you're trading these daily options. It's out of control. Okay, it's not worth it. Stay in cash, get your 5.25% from your money market fund. Wait for, wait for an oversold rally because you know what, look, people get overly bearish, the market rallies, then it comes down again. Any rally is to be sold. We're in bear market rally. Finally, the numbers are in the economy are going to really turn down hard. So stay out of short-term options. Take advantage of the artificially strong dollar. Buy commodities, funds, buy emerging markets. Get involved in gold or crypto, whatever you feel. Whatever you feel is a way to play against the fiat currencies. And always, if you're an investor, be careful out there.